Hey everyone, so this is Andy again. I know I have not made a lot of videos recently. Recently I've been doing a lot of these 0DT trades on SPY, QQQ, IWM in terms of the major indices. What I'm gonna go ahead and do is I'm just gonna walk through some of the trades that I took this week. I have it set as backtesting mode, or I guess replay mode on TradingView. And so what I'm going to go ahead and do is just walk you through kind of like, what I kind of consider good entries, how to take profit, etc., what kind of goes in my mind. I'm mostly a 0DT as well as an options trader, so there are some nuances with trading shares, options. So I'm going to also be kind of going over, you know, selection in terms of like 0DTEs, like out of the money, in the money, and perhaps out the money as well. And generally at what points of the day or what types of entries, how I'm deciding all that information. Um, and yeah, I think there's going to be a couple good concepts in here that'll help you guys out. Um, a lot of people here are probably strat traders, so they understand all the candles, the entries. Um, what I found in my practice is that strat is a good kind of concept for risk management. But I believe with taking entries and kind of what I'll talk about, I think in practical terms it'll help you guys out a lot more. With the strat, it's a lot of times it's just like a 50-50 break. If it goes two up, you get an entry in. You may not have the best entry, and then if it works, it works. If it doesn't, it doesn't. As a new trader, it can get a little discouraging just because you're kind of just rolling the dice at that point, and if you don't have a big kind of like a size account, you're not able to kind of take multiple entries as well. You have kind of like a uh, mental buying power as well, where sometimes if you fail the first two, three trades, you kind of just lose confidence throughout the day. So perhaps this video will help you guys out in terms of what we'll talk about. Okay, so with SPY, I'm just marking out these key levels here. Um, if you can see here, this is the daily chart and Qs starting on the week. So you can see like perhaps there's all these levels marked out. They're just basically lower pivots around previous areas that have been kind of triggered before. Major in terms of like on the day, the major areas you want to kind of be aware about are like the um, previous day low, previous day high, um, as well as the opening of the day is very important. And as well, you can also look at the pre-market lows, pre-market highs to get certain types of levels that you might find very important. As well, there are certain days that are seen as more important than others. So, for example, this giant red bar here, this was kind of like the Trump tweet news where we saw like a huge kind of volatility in the market. A lot of traders will recognize this as a key level in terms of like where the highs are, um, where the lows are. And so in general, you can see that this line is very much respected. You can be kind of, in terms of subjectivity, do you want to make a line here? Do you want to make a line here? Some people like to draw it as like a box here in terms of a level like this. Mostly just preference in terms of what you want to do, what helps you. But I think of it just as more of an area versus kind of like needing to be very exact on the dot with that. So in regards to that, um, we can just go ahead and get started here. I have the 1 day, 5 minute, 2 minute. Those are mostly the time frames that I use, just because I've gotten down to getting it to how I like it. I mean, you can always use the 30 and 60s. What I found, at least when you're trading 0 DTEs and on a lot of other tickers, is that sometimes you can be pretty late to the party on a 30 and 60, even though you get a more generalized and a bigger picture view. So sometimes instead of getting a full like 100%, 200% move, you might get like 30%, 50%, which it's not necessarily terrible. But perhaps what I show you guys today may help you when you're trading as well. Okay, so let's go ahead. Let me see if I can set this to extended hours. So you can see here, these are the extended hours from Friday because I'm going to start on Monday. Oh, on Monday, sorry. So because I'm going to start on Friday. So this is can be a bit difficult to read the level, but you can generally see like, oh no, maybe here, maybe here. I would say at this point you can use the 30 and 60 just to get a better gauge of like what's going on. So obviously we can see like this blue line I've marked, you know, there's somewhat of a key level here, there's somewhat of a key level up there. Um, Maybe let's set it as the hourly, a better example. Yeah, okay, so 30. And you can kind of just mark those levels out like as such here. Here. Yeah, that blue level's good. And then you've got like the low of the day as well. Yeah, so that's, I mean, this level is pretty close to here, but just a general sense idea is, in my opinion, good enough. So, yeah, we'll just leave it at that for now. Okay, so the thing about levels too is that even though we've marked them out, we kind of want to see price actually, what's the word? Um, Bounce off of them or show some kind of sign that they're there. So a lot of times we can see price, if they hit the level, they start making a wick and then they fall back down. We can see that, you know, the market sees that the level is there. We don't want to just assume that the level is there unless it's really obvious. A lot of times if you have a level and the price just goes right through it, cuts through it like butter, it's kind of a sign that the market may not, you know, respect it. Um, just something that you want to keep in mind when I talk more about, you know, what's going on. So if we kind of go through the first candle of the day here. Uh, okay, so here's the first. Oh, shoot. Let me. I've had it set as a 50. That was a 30 minute, sorry. So let me go back to Monday. Perfect. So we have our extended hours. Great. Okay, so let's start the first candle. Okay, so the first 2 minute candle, right, what do we get? We see that price kind of breaks the pre-market low, wicks up, makes a 3 candle. So at some point the candle did go down, right, and then get reclaimed back to a green. Um, what I will say with when you're back testing versus when you're trading in real life, in real life you're gonna see this candle move, right? It's gonna go like down, up, and so that I would say it's kind of a fine line in terms of an art in deciding if I'm going to enter while a candle is still kind of wicking or if I'm going to enter after as soon as the candle closes, right? Because a lot of times you can think that a candle's going to go, you know, if this is already red and it's coming down, a lot of people are going to take a short without kind of like seeing the price. And I think a lot of times what you have to do, especially in the opening like range, is kind of keep in mind some factors that are playing out. I want to know, is the price actually like the price action really just, you know, is there a lot going on, or is it kind of muted and like you're getting up or you're going down, you're like you feel like you're within a doji candle, or is there really a good sense of like buyers trying to push it up, push it down, like aggression going on? When you see that there's more price action, more aggression, and perhaps more like relative volume going on, that's when you can kind of take like a lower opening range break on the 1 minute, 5 minute, 15 minute. Versus if like this price action is really choppy, it's like there's no sense of like, you know, it kind of goes up, then it gets sold back down, then it goes back up, then sold back down, kind of like an inside bar action. When that happens, then you kind of want to be more patient. Wait for 30 minutes, 60 minutes, depending on what price is going to do. So in this case, you know, we get a big 3 candle. Let's in these cases, I usually don't want to take any trades right off the bat. I tend to want to just stay patient and see what the market wants to do. So here we get this 2 candle. Okay, what's the next candle going to do? Okay, so here it's showing pretty strong aggression. 2 down, right? It was red, then it's green, and now it's green to the upside. So the other thing you want to note here, right, is that the price is opening inside day compared to the previous day. So why is that something we want to kind of know about? Well, when you're trading inside of a previous candle, especially when you're right in the middle, right? If we were near the edge up here, down here, it'd be a different story. But because we're very smack down in the middle, I'm already thinking in my head there's going to be a lot of kind of like fake outs. So like right here, prices going up, a lot of people are going to be kind of tempted to take a long, right? But also what may happen is it might get reversed and you might come back down. So if you're starting off, generally more information is better, right? And you can see that there's a gap fill that's kind of going on within the 5 minute, 2 minute. So what I want to see is I want to see like, okay, this is the buyers coming in. They're kind of giving the initial move. So what are the sellers going to do as a response? Are they going to be weak or are they going to be strong? So let's just open a couple more candles and see what's gonna happen here. Okay, so another continuation. So this is the buyers here. Don't be tempted to kind of just chase this move. I always tell people, well, I always say to basically just be really patient. See what price wants to do, if it's going to actually break out. If it's just going to rocket to the moon off this price action, chances are you'll get maybe a short to come back down. But we want to just be patient to see what's going on. A lot of times, right, this gap just closed. What happens after a gap close? Oh, a reversal. But let's just be patient, see what happens here. Okay, continued green. So on the 5er, you're getting also, a green that gets bought up, and also a green over here. What you could have done here, actually, is if you want to just take a quick scalp, as soon as this 2, right, you have a green 2 up here. As soon as this candle here, if you're watching the 5er very closely, goes from being red to green and above this previous 2, you could have gotten an entry here if you're really experienced, if you know what you're doing, if you know what you're looking for, right? That could have been kind of a sniper entry, right, as soon as it goes up here. Now, if you're not that quick, or you're looking for kind of a bigger move versus a quick move, you don't necessarily want this. But in terms of what are we looking for off this move, right? Where is this move headed? Well, here's the first area, because you have these kind of wiki area off the 5. The second area is right here, off this previous area. And the third is probably up here, if it wants to go 2 up, right? But we don't know yet. That's where price is headed, but we haven't really let the seller step in to kind of like give their rebuttal in terms of this price action. So it's not necessary to necessarily get in off this kind of quick move, but if you're in it, let's just say you're in it, right? You're in off this 2 up, opening range break, because you see this action. It was red, it's green, it gets bought up, it gets bought up. You're in off here. How do you decide if you're an options trader? I mean, if you're shares, you're shares. But if you're an options trader, how do you decide between, like, should I go out the money here? Should I go at the money? Should I go out, deep in the money? What do I do? So things you kind of want to keep in mind are that when you buy options, there are certain things that are priced into them, right? So in terms of at the money and out the money, things that I keep track of in the market is like, one, where do I think price is going to go? If I think price is going to hit at least like, let's say up here, $612, I don't necessarily want to buy an option at 612. What I like to do is take my price and subtract by 2, and so then it's kind of like, it would be like what, 610 would be kind of my strike if I wanted to go out of the money, versus like what I might want to consider is just going right now. Price over at this point is 608, so I would probably either go for the 608 or the 609 calls, which are more in the money versus like totally out of the money in this case. But you're kind of asking why, right? So one of the things that's priced into options is implied volatility. So it's kind of like when you buy an option, how much volatility is in that option. It's kind of like if the market is moving at 100 miles per hour, right? You're kind of buying the option with that pricing that, hey, this option is going to continue moving that fast. Versus if you're buying at the money, less of that implied volatility is priced in. So in terms of scale, in terms of like implied volatility, the volatile IV affects the out of the money options way more than they do compared to at the money or in the money. So what you want to think about is like, in terms of where price is now, is it moving really fast at 100 miles per hour, or is it moving really slow and being very choppy, right? Because if you're thinking, okay, if I'm in an environment where things are moving really fast, do I think they're going to go even faster than they are now? And typically the answer is no if you're trading within the first 5, 10, like hour of the day, because that's when price and volatility are the highest. So that's in my, okay, I'm taking a trade right off the morning, like in the middle of in the beginning of the day. So, okay, the implied volatility is going to be really high. Do I think it's going to go higher? Probably not, because I don't have enough information yet. The buyer stepped up, the sellers haven't shown me anything. No one's losing yet, just right off the bat. So in this case, I'm thinking, okay, let's go more at the money, because I think that implied volatility is probably going to go down. Like there's going to be less price action um, off of this break, especially if we get to an area where price just stalls. Okay, so in that case, let's go at the money. At this point, if we took this right here, 608, get the 608 or the 609 call and just call it a day. How do you manage this position though? So there's a couple ways. Um, Typically what I want to do is I want an area where it can at least take half off. Like this is going to be green candle, green candle, green candle, green candle. But as soon as I get some kind of like doji, or I get some kind of like, what do you call it, shooter, or some kind of like stalling in price, like a 2 down against me, right? Or a 2 down red that kind of like doesn't look quite great. I want to take half off with some profits locked in. And at that point, if price continues to go my way, I'll keep going. But if I get some kind of like fiver against me that closes against me, then um, you know, we'll go from there. So let's just say we had entered off this, two fiver, and like as soon as this went from like green, red to green, I'm in. If price is already up here and you're like, oh, I'm late to the party, should I still get in? No, the answer is no, you should not. Because what happens here is when price is, initially within this small range, the options are priced decently, but by the time it gets up here, it's already like we're already pricing a move up to there. Versus if you get in earlier, the move isn't necessarily like priced in yet. But that being said, you don't want to just take a 50-50 gamble right off the opening of the day, because even though you might be right with in terms of like where the direction is headed, you're gonna lose in terms of like how fast it gets there. Like if you think price is gonna get here, but it takes all damn day, like it comes all the way down here, finally after a whole bunch of action, 5 hours later, it finally ends up here. Like all that time decay is still gonna hurt you, even on a 0 DTE. So let's continue. Sorry if I'm kind of interrupting and you guys just want to see a back test, but I think I'm giving a lot of good information at the top of my head. Um, and in terms of price, right? I know that the strat says like, hey, here's the top of a 30 or 60. This should be your ultimate target. What I found with trading indexes and just in general, and even equities, is that the actual better spot to put your price target is like right here, or at least like if there's a candle, oops, just put it like somewhere like where the not necessarily where the wick is, but where the kind of the body of the candle is. Most of the time that's going to give you a more, like, I can say that most of the time the price is going to get up to there, versus like sometimes because there's like a lot of sellers or the price action is weak and people want to create like a lower high, then you may get only up to here or down here or so forth. So, and if you're in an area where like I don't want to like leave until I get my target, and like imagine if price gets all the way up to here and starts reversing and you're like, nope, I think it's still going to hit this wick, right? Do you really want to sit through all that to just be told you're wrong? Or if you get price that comes all the way down here and then finally comes back up to hit your target, do you really want to sit through that? Or you could just be out here and go be looking to do other things with your time versus spending all that pain and suffering to just make an extra, wick off the top. So, okay, let's keep going here. Sorry. Okay, price keeps going. If we're in here, we're pretty happy. We're not necessarily going to be out. I have indicators down here. This is relative volume. Tells me like based on the last 10 days how much volume we have compared to the rest. So it's kind of like a gauge of like, within the last 10 days, are we trading at really high volume? Are we trading at low volume? What's kind of the gist? So like right in this middle line would be like, 1, which is like average volume, and like green is like really high volume, and like red is like low. So right now we're still not trading at huge volume, I would say. We're kind of like within average, right? 0.9, around 1. I mean, I would say we're like average volume. So as opposed to like if we have huge volume off the break, then I get more confidence. right now I'm thinking, okay, low volume, we're getting a big push. I'm not expecting this to be a huge move. I want to see the sellers show me where they're going to show up, but I'm kind of going to let price like dictate that. And then this is something called CVD, which is cumulative volume delta, which tells me like is most of the volume within each, is most of the volume mostly selling or buying going on. Um, so like, you know, in terms of like volume that's being produced, right? You always have to have an active one and then also a passive one. So like if you're a limit order that's just being placed, then you're going to be passive versus if you're market ordering in because you're aggressive. So a lot of times, right, if you're looking at key levels around this like high or perhaps up above or near this high, you're going to have a lot of people that have like buy orders or sell orders. Those are basically people that are just limit orders. And if you're looking at kind of like, a book map or some kind of like chart to see like, where all these orders are, that's great and all, but it doesn't really give you any predictive ability to say what is going to happen when price reaches that level, because most of the people that aren't in the market but are more important are going to be those aggressive buyers or sellers. So once you get up here, right, are the people that have those market orders going to step up and blast this thing up, or are they going to kind of sell it down? We don't know. So, but those are the people that are going to matter more than people that are just hanging around sitting there at the level. It is still important in terms of like knowing where the level is, where price is going to go, because that's where all the liquidity is, right? And then price wants to get to that liquidity to either make a decision. So, again, we're here. We're still doing good. I have a lot of lines here. Maybe I'll talk about them later. Moving averages, Bollinger Bands, etc. But I think price action is something you just want to focus on for now. So, keep in mind here, we're still inside bar, right? Yeah. Okay. Next. Oh, okay. So this is our first area that price stalls, right? It's like we don't get a 2 up off this 2 candle. So we're a little bit, off a 2-1, it could be a 2-1-2 down. We don't know. But we do know that we got a pretty awesome move off here up to there. So at this point, you can either take some off or you can defend by looking for a 2-1, like, if this goes 2 down on the next bar, you can get out. I would say if you want to be a quick scalp, especially after we hit this target and went down, you can get out. But let's just take a look at this line, right? So, sorry. Yeah, I would say we're kind of like at the area where the level hit. Price could go either way at this point. Um, yeah, you could definitely take some off if you wanted to for a quick scalp. Otherwise, you can leave it. I'd probably just leave it for now, just because the 5 is still showing me some strength. Okay, I guess it's 2 clicks to keep going. Okay, still good. So, okay, so now we got a 2-1-2 red 2 up doji, and is this going to be the complete 5-er? Let's see here. Okay, price is definitely at this point stalling. So at this point, it might be wise to take some off. Well, let's see here, 640. Okay, we'll give one more 2 up candle here. Okay, so this is actually good for us. 2 up 3. So the 5-er is still good. Keep in mind we did just hit this kind of expected move of the day, the ADR. The 5-er still haven't shown me any kind of, against me. But if you took a little bit of profit here, like maybe half your position off, and you want to let the rest go, you can trail it and wait for like a 5-er against you. If you're still in it, that's fine. So let's say we took this entry, I'm still in it, we're still good. This is kind of going to be our next level of contention, especially with this red moving average on the way, which matches very much along with this area here. So let's keep going. Okay, 3-1, 640. 645. This is the first red candle. This is something we have to be very cautious of, especially because we just hit this kind of like area up here. So if this was the close of the 640 candle, I probably would be, yeah, I probably would just take a good portion off, 50%, if I haven't taken it already. If it starts reversing against me, I don't necessarily want to be in it, but Still okay. Okay, 3-1. This is looking still okay. If you still have some position in it, remember at this point maybe we took something off, maybe we're not. We're still good. Okay, 3-1-2. Okay, and we made another 2 up. This is great. So this is going to be our next level to be kind of looking out for. 3-1. Still good. So I'm not worried at this point. The price is just still kind of grinding up higher. At this point, I'm kind of like past the time of just looking at twos. We hit this target area up here. Price is still good. Are we going to go 2 up? Maybe, maybe not. But I have that mark level kind of marked out. So at this point, I'm going to be focusing more on the 5, just because we're kind of, you know, after the first like 15 minutes of the day, we're in a good position off the 5 here. And I'm basically thinking at this point that the sellers really haven't really shown me their hand. But if I get like a 5er against me or some kind of distress, then I'll probably want to be out. So let's keep going here. So I have a 3 now. This is getting a little bit more worrisome. If I get like a 3-2 down, that's gonna just be my out for the whole entire position, especially because we're just in a 1 bar, right? And we just hit this kind of red moving average area. 3-2 down, I'm out. Okay, it's still a 3. Okay, yeah, this is looking not super hot at this point. I think I might be out soon if this goes 3-2 down. Yeah, so this would probably be my exit right here. Right, 3 against you plus a 2 down. I would have been out as soon as this went 3-2 down, which is fine. So now at this point, I'm thinking in my mind, maybe go shorts, right? Because now the sellers are kind of showing me their hand. I don't necessarily want to just get in off this 2 down 3 though. What I like to do is I like to look for kind of like, in my mind, confirmation. So what is confirmation, right? What I want to see is I want to see the buyers have a chance to kind of reverse this first, create like a lower high, and then get in off that kind of reversal. That can look like a 2 up, 2 down. That can look like perhaps like a 3. We'll see if that happens here. So price is still going down, down, down. You know, I'm thinking in my mind, okay, I want to be perhaps, what's the word? Not bullish, bearish, sorry. I'm looking for shorts at this point, but I want to be measured. Okay, again, still looking pretty strong to the downside, but I want to be patient for an entry, or I want to be open-minded for, you know, perhaps a long back to the upside. So at this point, right, we've kind of created this formation where it's like up, down, and I'm expecting at some point to get kind of a 2 up situation to go back to the upside. But I don't know, right, in this case, what's going to happen. So in my mind, there's 2 kind of situations that can occur, especially when you get kind of a 2 up, right? I don't know if this is going to be the 2 up. Maybe it gets countered, maybe it comes back down, maybe it goes back up. But here's what I kind of want to show you guys. And this is very important when you guys take trades, especially to the 2 upside. I'm looking for my like arrows, like up, down, up, down, up, down kind of thing. Sorry, oh, here's the path. Okay, here's path number 1, right? So if we go up, right, a lot of times what can happen is we get up to this area, price creates a lower high, and then we just go back down to the downside. And if, you know, if we're lucky, we'll retest this level before coming further down. That's one plan that can occur. The other plan that can occur too is we can actually break above this previous high. And sometimes we might get to the match and then we might break down, right? That's another option. The bullish side option is what can happen as we go up here, retest this previous high, and then go up higher, right? So you have like multiple scenarios in which this can play out. And it doesn't necessarily have to happen and like immediately. Sometimes what will happen is like it's like we can't decide what do we do, and you get this kind of like broadening information that comes up and up and up before so finally decisions made. And perhaps, you know, this can also be, you know, back to the upside eventually as well. the thing is, you don't know, right? So, taking that two up here, you want to have an open mind in terms of like what can happen. But you also want to be patient and kind of want let the price kind of like play out. You don't want to just get in on a two up here, right? If the next candle works two up, I don't want to necessarily be in, because what I want to see is, I want to see here, okay, buyers had their chance, sellers had their chance. Now let's see who's gonna win out. So here we go. Also inside bar, but okay. See, this is gonna get a lot of people that want to get in on this two up. Ooh, right? So this is, in my mind, this is like, okay, buyers tried it, they're weak, so the buyers just had an opportunity to get in, but it's not necessarily going to work out. So it is possible, but the other issue again you're keeping in mind is inside bar on the day. So choppy action is definitely a possibility until we get to the outside of it, or until we get some kind of major, like, sellers, buyers that get just totally ripped apart. So let's see here. In my mind, this is my confirmation to go short. So what I'm gonna do, because I've already seen this get reversed, right? And then the buyers had a chance to take this back up, especially above this black line, which is VWAP. Faked out a couple people, didn't happen. Now it's going back down. I kind of like this to the short side. So is there a proper entry here? Yeah, if we counter the shooter, I think I'm down to get in on a short. So perfect. This would be my entry here, right? I mean, you could perhaps care, but I like to see the whole shooter actually get torn apart first. So let's say that's your entry to the short side. Okay, let's delete our previous entry as well. So let's say we're in off shorts here. What's my target? Low of day, right? And then beyond that, perhaps we can get to down here on the daily. But let's see what happens. Okay. Okay, so we're getting this little bit of price chop here, two up against our position here. I would say this is an area you could get out. You could also set your out to be this high area here, right? Or you could also say like this is the ultimate high I want to get out at. If you want to be conservative, good mix of either or. I would say a close above this area. So I'm gonna say my stop is gonna be kind of like a 5 or close above this area. You could say a 2, but again, this is where it requires a lot of discipline, right? I'm not necessarily saying a wick is gonna get me out, but I need an actual close that continues further on to get me out. So let's take a look. Okay, we're still good in the short. I mean, this is terrible price action. So if you're not within this, you're fine. If you're in it where I was in it, you're probably gonna see your position be like up and down 30%, 40, 50%, so forth. Um, at this point in the day, though, I would still say, like, because we're in the middle of the range inside day, I would probably like to say that you want to have taken at this point at the money. There isn't a clear setup where you're at the bottom of broad information breaking the upside where you want out of the money yet. So again, forgot to mention before, at the money here. Again, if you set your stop with this two up against you very conservatively, you could just take like a quick 5-10% and out and just be out of the position and wait for an opportunity to get you back in. Especially because you're in this kind of like chop. So let's draw the rectangle to describe where this chop is, right here. This is the chop. So you can see that the price actually did close and break down to the bottom side. So how are you going to play this if you want to go short, right? I would say the best way in this situation, you want to see price go here. Yeah, that's not the right one. You want to see some type of down. down, up, fail to get back above here, and then continue downwards. That's what I would want to see if you're gonna take another short. But if you're already in a short, you can add to it as well. So here's what we're gonna see, right? Are we gonna reclaim this level, or are we gonna not? So let's go for it. Okay, so this is kind of what we talked about, right? Price did try to hit this previous level, failed, and now if you wanted to take a short from down here, you could go 2 down, right, and try to break to the downside of this 2 bar. Let's see if that happens. Nice. So if we took this right here, we're in the trade. Maybe you want to add to your short here because we never got stopped out of this position. This position is probably going to be finally in like some kind of green. Here you can add to your position too. I would say if you were here, right, price was at 608, you could go with the 609, 608 call, or 608 or 609. Puts here, same deal, I would say, 609, 608 puts. If you were short draw McGraw and you got in off here, you could have as well, but I mean, this is kind of risky, I would say, but you know, in terms of what we're talking, here's an entry, here's an add. First target you want to take something off is going to be the daily, is going to be the, what's it called, daily open, is where we're going to try to at least takes half off, and maybe take the full position off on this trade, take some off, but we want to see what Qs do here, right? Okay, so hit daily open. This is an area what I would just consider taking if I was in off of like off this position. You could take half of it off, just because we can lock in some profits. Here you could also take a half off as well if you wanted to make this a quick scalp. Otherwise, again, 2 up reversal against you, that would be your signal to get out. But right now you can just hold. Okay. Okay, price is weak. 2 up. Is this gonna hold 2 up against you? No. So here we want to see is a kind of a shooter. Okay, that's looking great. Okay, this is so this is something that we want to be aware about. So okay, we had one attempt to go lower. This at this daily open, which is kind of a resistance level. Second candle, tried to do it too. Couldn't break it. So now I'm kind of at a point where if you're looking at the CVD as well, volume is still kind of low, right? Still red. CVD, we're not pushing much higher, right? We kind of want this gradual move, to see this gradual move, especially in the beginning of the day here, right? To kind of give us confidence at buying, right? As soon as buying stops going as high or gets equal high in terms of the CVD, that's when I'm a little bit worried. Here, that's kind of what's happening, right? Low, 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 low. It's kind of like matched. So, in this case, we had attempt 1 to break lower, attempt 2 to break lower. I would say any type of like against me at this point, I would be out. So let's just see what happens. Okay, we get the push. This is good. If you're short, this is what we want. This is going to be kind of our target to see if we can break that, and maybe we can keep going lower. I would say probably a 2, probably a 5er against me would probably be what I'm going to manage at this point, but I mean, we'll continue to look at them both. Nice. Okay, so now our position is like, you know, if you took half off, you're still making profit. You're making bank. This is great. Maybe you closed your whole initial position when it got to here. Now we have this position as a runner. Maybe, I don't know. That's for you guys to manage. In general, I like to say to take off at least half. But this is going to be kind of our target created on the beginning of the day. So at this point, take some off. Ooh, okay. So this is something we want to be careful about. Right, price header area, and went green on that candle, and then it tried to push up. We got a shooter. Okay, that's better. 2 candles that were green. So again, I'm kind of in this situation where are we going to continue pushing further? Any kind of 2 up against, I'm nervous now, especially because this 5er is green. Okay. Again, any two up. Yeah, it's a two up. That's against me. Alright, so I'm worried. I'm on red alert. This goes two up against me, or next candle goes two up at all. No wick, just close. I'm done. It's a three. Okay, so I'm out. This candle right here, I would have been out. On this close of a two, I'm done. I don't want to be in this anymore. I close the position, everything gone, like everything's out, like flat. So now we're gonna think, okay, is this gonna be a possibility that we go reversal from here back to the upside within an inside bar, right? So that could be a possibility, right? Because we don't know. But again, what are the possibilities in this case, right? So, price started here, it went up to here. Oh, come on, dude. Why you gotta do this? Coming in here. Okay, scenario one. Right, and we bust out of this. Scenario two. Scenario three. Right, okay. So, let's say we want to take this back to the upside. Okay, how do we do that? 2, 3. This is the first sign that something is going our way. As soon as this goes 3, 2 up, I'll take it on the 5. You could also try to take it on this 2 up against this really strong 2 as soon as this goes 2 up, like right here. But I'd say probably on the 5er is better, just because you want to know that this is a 3, 2 expansion back to the upside. I'll just go ahead 3, 2. I'll be in, and we're in right here. We're in that position. What's your stop? Your stop's going to be like basically down here, a close against you down here, not just a wick. So let's see what happens here. Shit, this thing's going our way. Okay. Again, I know this isn't live, but this is kind of like what I'm thinking at the top of my head, and I'm hoping that my thoughts that I go with you guys kind of clears that up. So again, let's think about 3 scenarios. Possible reversal around here, possible reversal when we get up to this area, right? Which really corresponds well to this blue line I've had drawn earlier. But again, this is going to be our kind of like pseudo possible next area of reversal here. Okay, here we go. This is VWAP. I'm expecting some type of like maybe pullback here. Okay. How to play this? So let's look at CVD. Okay, green, green, green. Okay, so I would say a 2 down. I would say probably we're in such good profit here. At this point, this is like the first, after this first initial push on this area where its prices may be stalling, you can take maybe 50% or just take a partial. Otherwise, you can hold for a 2 down against you, like 2 down that closes against you, or a 5 wick that wicks against you. But I do want to give price a little bit more of a chance, right? It hasn't really gone against me. It's just kind of like, bink, bounced off of it. Next. So it did come down, but it immediately went green. Nice, that's perfect. Okay. So price went above it. So now what I can expect when it gets above this level? What I'd like to see is, hits this, gets rebought, goes back up. Yep, there we go. Again, hitting this major red level. This is an area where we're going to be watching. Okay. Okay, again, I'm watching for any kind of 2 down close against, or like a 5er close against. is starting to, you see these wicks here that's getting a little bit, maybe, so I'm getting a little worried here because this is an area, right? I would say this is an area, if you didn't take profit down here, take some off here, please. Okay, let's see what happens. Okay, oh, okay, we break up, good. Maybe you still have something on. Again, this is gonna be our next area, like up here, this kind of area here. I'm waiting for a fiver against me. At this point, I'm already in heavy profit, then I'm gonna just be waiting for a fiver against me. Okay, 2 down against me, but not a fiver. Again, I'm waiting for a fiver against me at this point. Don't even care. Okay, here we go. Perfect. Okay, so this is gonna be. We have a clear level here. 2, 3, 1, 2, 2, 2, 1, 2 down, 2 down. Okay, is this the close? 9, 12. Okay, it's the first bar of that here. I'm still okay. Right here, I'm just waiting to have the. What I'm waiting for in this case, is I want the buyers to have a chance at taking this 2 up, and then either continue going up, or they try to take it up and then it gets heavily reversed by the sellers. It's either that or just a total close, like an actual fiver that closes against me, like with the body outside of this 2 area. So just gonna keep being patient here. Okay. Okay, I'm out. This is the fiver against me with the body, right? We're out, but you made a good profit from here to here. Okay, so again, we're in this kind of like awkward ass middle area where, think of the possibilities, right? If when we do eventually see like a fiver that goes 2 up in this area, right? You have option 1, right down, right? Or like this, right? We don't know yet though. We want to see what we want to see on the fiver level, that the buyers do something to show me that they're gonna get wrecked or not. Okay. Okay. It's just inside price action. You don't want to be in there. Okay. So okay. This candle right here is very important. Why is it very important? You see this? You see this kind of like inside price action. You see how there was a 2 up at one point here. This is what I'm talking about. The buyers had their opportunity to take this up, and guess what happened? The sellers stepped in and said nope. Not only did they like turn it red, but they went totally against that side, right? Who are they? They're going to be taking out all these people that got trapped up here and buying it up, thinking that we're going to push up here and beyond and so forth. So this is very important right here. Okay. So let's see. Now what we're looking for is confirmation to the downside. So how do we see that? Okay, so this is your kind of like consolidation zone. Yeah. Right. So again, if I'm going to take this short, what do I want to see? I want to see price do something like this. Right? Push up. If it can't reclaim that level, then we're going to take this kind of break down to the bottom side. So I want to, if I'm going to go short, this is what I want to see. What I do not want to see is this. Right? Okay, so let's see what happens here. Am I just not going to get it? No retest, huh? Uh, yeah, that's lame. Yeah, I mean, ideal situation is you get some type of retest back up here. Mm. I mean, the other option is you could have taken this 3-2 down here. Mm. It broke. Buyers took a weak attempt up. 2-1-2 down. I don't know. I wouldn't chase it. Unfortunately, the move might go all the way down, but I just can't. It's not very good. I want to see the buyers have a chance to hold this back up. Yeah, which I don't think. Oh, okay, here we go. Okay, here's a chance. Here's an opportunity to get in, right? You see this? This looks like a hammer. This might be an area where people want to get in. 2, 1, 2 up. So if this goes 2 down here, it gets reversed, I'll get in off this. At least I can get in off this. This is something I can get in, right? Buyer stepping it up, and then if they get reversed, I can at least take this mini broadening formation. So I'll get in off this 2-1-2 down if it happens. Perfect. I'm in off this. Okay. So I'll take that, right? But you see how I'm like not just chasing the move when I see this big giant red bar and just trying to click buy as fast as I can, right? Or buying calls or buying puts. I'm just again at this point taking it. So at this point, where's price gonna go? It's gonna go probably back down to here, 605. So I'll probably buy the add $2, 607. Oh, we're already at 607. Yeah, we're still inside day. But I would say this is going to push further down, right? Because you have a double top. Attempt 1, attempt 2, and then this wants to probably just burst to the downside. I'll probably buy out of the money, 605. Especially because it's like already what, like a couple hours in the day. Volatility is kind of like slowed down in terms of the IV at least. In terms of IV, in terms of what's expected to occur, it's definitely way less than buying premium just right up here. So at this point, I'd probably buy 605s. That way, when it gets at the money, take some profit, and then I can just leave the rest hanging if in case it keeps going my way. Yeah. So again, entry off this, and we're just gonna manage it with 5s and 2s at this point. Okay, still good. No 2 up against me. Targeting down here. Targeting down here. This is not a 2 up against me. Okay, we're good. Okay, so CBD is kind of slowing. I'll give it one last push. It's green though. Ooh. Okay. So when the price tapped here and went up here, you probably could have taken half off. If you didn't and you saw this green against you and you were in from here, or like, if you were smart enough to get in off this, and not wait for that confirmation like I was saying, you probably want to take something off at this point. If this 5er closes, 5er up against me, I'm gonna just be out of the position. Like, I'll wait for the candle to close. If it closes with the body out, I think I'm done. Okay, I'm still good. Sorry, it's really annoying for me to know when the candle closes or if it's just halfway on the backtest mode. Okay, is this shooter gonna get canceled? Either way, if you didn't take any profit off, you're half out at this point, at least for me, because we're already so close to this area, right? Our target's not necessarily, like I've been saying in the past, is not going to be here. I would say it should be here, right, where the bodies are. Because again, this can happen a lot to you. So again, set up good practice, bodies, not the wicks. Don't be greedy. Okay. Okay, still good. Yeah. Is the fiver gonna close against me? No fiver against me. I'm still in it until the fiver goes against me. I mean, we've created an equal high at this point, so CBD is dropping. So I'm hoping we don't get some type of double bottom here. I really need this to keep pushing. Yeah, I would be careful here. Yeah, let's see. Yeah, this is our position in. I will say at this point, if I'm not break even or if I've like taken like at least half off and so such, the rest, and let's say your best case scenario, you took it up here and you're down here and you're at like, when you take profit, right, you're already in a position where like this is a no risk trade. Ideally, once you've taken half off, the rest of your position that you have, no matter what number it closes at, you're gonna still be in profit. I would at that point just set my like um, stop loss to be at this point like probably a close against my position here, or even, yeah, at this point. So what am I thinking, right? Why am I worried? So I would say at this point I'm worried because this could be a double bottom down here and back to the upside, especially because this is like such an annoying inside day, and this can be what happens on an inside day. um when price gets up to here, typically I want it to come all the way just back down. Sometimes it does that, sometimes it doesn't. Sometimes what it'll even do is it'll go like this. Oops. Sorry. Fake out a bunch of people thinking it's going to go back long and then finally reverse it. So the question for me to decide is like, if I'm already in profit here, do I want to hold the rest of the position to like go through this kind of like correction if it happens, or do I just want to like take half off, put myself in a risk free where no matter I can just sit through this if, and then just let it go, um, or just take the full position off here and if this, and then take another short off here, right? So I think at this point, I will just take the full position off if we go above and close above this level. Again, close. So I'm gonna move this stop here, right here. A close above this area on a fiver is gonna be my out. So, uh, man, let's just see what happens. Okay, so remember how I said a close, right? I'm not out, but this is really hard to get through because even though I've set my rule to be like a close above this level, I'm out. What does it do? It doesn't, the body doesn't close above it. And so at this point, when I see this go 2 down in red, um, why does this happen, right? This is that idea that the buyers think, hey, we're going back up, and so a lot of these guys, when they see this green, they're just jumping in. Hella people jumping in on this candle, on this area. And so when this candle reverses and goes 2 down in red like that and goes continuation 2 down, this would be my ad, because I know so many people are getting wrecked right here, thinking what I just told you. Double bottom to the upside, break up the previous high, higher low, right up here. When this gets reversed, you want to be in this, right? If you want to be in this as soon as these people up here get trapped, like the low of this, I would say, because that's what your stop is, right? Or your stop could be here too, but your stop is probably here. And then when this closes 2 down against, you're in. If you want to wait for 2 down red, that's fine too. But I'm in the position here. I was a little scared, but hey, boom. An ad over here. So, you've got 1R here, 2R here. Let's see what this takes us. Yep. Okay, so, yep. Now the sellers have shown their hand. The buyers showed their hand. The sellers said nope. So the sellers are strong. How are we gonna manage this position? Um, Fiver close against me. I'm out. Fiver that closes with the body up against me. I'm out. Nope. Come on. I'm not out. Um, this is another possible add right here on this 3-2. Well, you could have added here too as well in the 5, right? Seller tried to take it up. 2, 1, 2 down. 1, 2, 2 right here on this reversal because the seller tried to take it up. You could add there. Boom, another add right here on this hammer that gets like, this is a bait hammer right here. Gets you in, countered, stopped out, and then boom, 3-2 right here. You can get in there. So let's say we added on all those. You're at like position 1. You were at position 1, right up here. Position 2, position 3, position 4. And again, I'm going to be out on any fiver against me, like with the body and everything like we talked about. Okay, right here. Is that body? Nope. Okay, we're still good. We're still good. If these guys get reversed, right? If this gets reversed, closes down, I might just go back in again. Nope, nope, we're still good. Okay, here, nope, okay. Damn, what, I'm not gonna get a fiver again. Well, here's another thing you want to consider is that because the price is now stalling, you could consider taking at least like half your position off. You see this too, right? It's starting to like consolidate. And if you're in so much profit from up here, you don't necessarily want to have all that exposure, so you can take at least a fourth half of your entire position off at this point. Yeah. I don't have a fiver against me yet, so this is nice, I guess. Oh, this is already at the end of the day. I probably want to get out now. Yeah, I think I'd probably just go flat at this point, but dude, I don't have a fiver against me. Damn, dude. Okay, I'm out. I'm out. I'm out. I'm out. Cut everything. Cut everything. I'm out. So fiver against me. I'm done. Yeah. So this is how the rest of the day turned out. Sorry, I didn't realize like at what point of the time of day it was. Once it hits around 12 o'clock, I like to take 12 to 12:30. That's when I like to just kind of cut all my positions. Um, just because with zero DTEs, it's just anything can happen in the last 30. Especially if a lot of people are short, they can just unwind their positions. But I think if we had followed those rules, we would have been pretty good through this day. So not too bad. Oh my god, the video is already super long. Okay, let me just stop recording. Maybe I'll do next day, Tuesday, if people are interested.